This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of October 10th, 2022. We apologize that there was not one of these summaries last week, but I was fighting a bad case of laryngitis all last week and only had one or two podcasts the whole week anyway. And you can still hear that in my voice as the week begins back on Monday. A week that we knew was going to be treacherous given the slate of economic data, that it was going to include a lot of inflation data and other points that you knew were going to make the bond market and the dollar index very volatile. Dollar index was rallying back on Monday after falling and helping the precious metals to bounce. But here it was bouncing back. And that was one of the things we discussed Monday, October the 10th. Again, dollar finishing Friday the 29th, end of September, end of the quarter, 112. Falling Monday and then particularly on Tuesday last week down to 110. And now we're all the way back above 113. Just another higher low. So why wouldn't the dollar look like it's about to make another higher high? Stronger than expected CPI. Really sticky inflation, energy prices soaring back, gasoline prices soaring back. That could sure push the dollar to 115, 116. Again, that's only going to make it uglier for us. Tuesday, October the 11th, was a pretty quiet day ahead of what was the inflation data that was coming on Wednesday and Thursday. One of the things we're tracking closely, though, is the stock market in the U.S. as measured by the S&P 500. Breaking down on Tuesday, closing at its lowest close of the year so far. It might take a real stock market washout to get the Fed to finally pivot. We thought it would happen by now, with the stock market already down more than 20% year to date, but it hasn't happened yet. But boy, that chart sure didn't look too good, and that was something we discussed Tuesday, the 11th. And how will this impact the S&P? Here's your chart of the S&P going back the first of the year, trending down right at, like I said today, closing right at, I think maybe within 2 points of that low close. Friday, September the 30th. We close this week even lower. I mean, we're getting really close. I'm glad we're still on crash warning because all the conditions are there. We just have to see. I keep saying that over and over. And that's obviously because I don't know what's going to happen next. And we're all at the whims of these markets and what these goons have to say. And if the Bank of England really is going to go right back to the sidelines and try to tighten, and if those pension funds haven't fixed their problem, and if they're unfixable, oh my God, things could get crazy as soon as overnight tonight. As it turns out, things did not get crazy overnight back on Tuesday night. But man, everything still continues to progress toward some type of liquidity event. One of the indicators we're watching is the exchange rate between the dollar and the Japanese yen. The yen, the weakest it has been in over 2 decades. This puts pressure on the Japanese government and the Japanese central bank, but also extends over to China. Might they be on the verge of a devaluation of their currency? Last time they did, the S&P fell 10% in 5 days back in 2015. So we've got to watch the dollar yen closely. All part of the discussion, Wednesday the 12th. Here's the dollar yen going back to the first of the year. It's quite a devaluation from 114 to 146, 32, 25%. Ouch. Oh, no wonder everybody's trying to sell their Japanese government bonds, and no wonder the only buyer is the Bank of Japan trying to keep their yield curve control in place. And they're just killing their currency. They can't do one. They got to do one or the other. So they're killing their currency. Getting the little blue arrow here to the date 3 weeks ago of Kuroda's yen intervention. It had tapped 146 before they intervened, selling dollars to buy yen, driving it back down to 141. And now, as you can see, blasting through 146 today all the way to 147. How crazy is that on a historical basis? Here's a chart that goes all the way back to when I was a junior or sophomore in high school. 1982. Yen was twice as high as it is now. How about that? Interesting to look at basically your whole life in one chart. Here it is. Anyway, as you can see, getting to 147 is the highest that the yen has been, the weakest that the yen has been since 1998. Getting close to, 160 would be the next stop? The highest since 1990? Crazy. What a jam old Crazy Kuroda is in. Thursday the 13th finally brought that latest update on U.S. inflation, the consumer price index, and a wild, volatile day in the markets as the dollar spiked, stonks and gold fell, but then the dollar reversed and fell and stonks rallied back. A huge change, huge reversal in stonks that day, and gold rallied back some too. But that was all part of the discussion on Thursday the 13th. One of the other things we talked about is just a complete control of the algorithms at this point in precious metals futures. Open interest at some of the lowest levels we've seen in a decade. So the algos are in complete control, and they're mainly tracking the dollar index, or even closer, the euro. These charts you'll see here are reflective of that. Notice how closely since April gold has tracked the dollar index, or inversely, or how it has closely tracked the euro. And that's really all it's about, is the dollar. My last 4 charts today, I'm going to show you something I've not shown you before, but I want you to see it with your own 2 eyes. Again, with gold open interest down to 435,000 and silver not even 130,000, there's nobody. There are no active large spec or short small spec or anybody traders. There's just computers that are just pre-programmed, and they are tracking the dollar, or maybe you want to look at it as the euro, which makes no sense. None, zero. No underlying fundamentals matter. And why would you, if the euro's getting devalued and really struggling, then you would think Europeans would be buying gold. But no, the COMEX gold just simply tracks, it's dollar gold. So anyway, look at this chart. The very first one here is the last year. This is a 12-month chart. The euro in candlesticks, and gold, December gold, is a blue line. And as you can see, from this time last year, all the way up until middle of April, when everything went to shit on us, they were going opposite directions. Euro going down, gold going up. But since the middle of April, almost tick for tick. And on Friday, October the 14th, we wrap up what was a dreary week for the precious metals with another just dreadful day for COMEX gold and COMEX silver. We'll see what next week brings, but right now you can look at this daily chart of the December contract, and you can plainly see that the downtrend that began back in April continues unabated. A series of lower lows and lower highs, failures to get back above the 50-day moving average. And it certainly appears that another lower low is coming. We all await the eventual central bank pivot back toward lower rates and quantitative easing that eventually, for certain, is coming. But in the meantime, with inflation remaining hot and the stonk market holding in there, looks like we're set up for another big Fed funds rate hike in a couple of weeks at the next Fed meeting, and the one after that in December too. Gold will likely remain under pressure, as will the mining shares, with just no end in sight, at least not for now. Thank you for listening to this week's Precious Metals podcast from TF Metals Report. Again, these daily podcasts are just a part of what you receive as a subscriber at TF Metals Report. I know it's no fun now, but it'll be fun again soon. Come join us, tfmetalsreport.com. Have a great weekend, everyone.